the proxy wasn't a target. It was our business plan for why we did the acquisition, and it was actually in a different time frame than the actual completion of the deal was in a different time frame. We're actually on our plan in terms of the timing of the investments we're making, the creation of customers that we expected, and you know, the marketplace has changed too. You remember we were in a 2-year chase. Comcast was involved at one point. That deal was denied. Then we bought the company. So, and then it took more than a year to close the deal, even after we got a new deal, because of the regulatory process. So, you know, we didn't actually close that deal in the time frame that those proxy statements were.
Right, and it's fair. Summary of the forecast regarding projected anticipated future operations.
Right.
But to be fair as well, your stock did run up to a certain extent that it is not seen again, based on investors' belief that those were forecasts that conceivably would be met.
Well, I'm not sure why the stock price ran up. I think there were other factors besides our actual operating performance. And, you know, and that is really the issue. We have an operating plan. We have a great set of assets, and we have an opportunity to create value on those assets. And yes, there was speculation in our stock, and there was M&A rumor in our stock, none of which came to fruition. And the reality is we have a great set of assets, and we have a great operating plan, and we're executing that plan, and we're achieving customer growth. We're growing nicely. We've had a very complex integration, which we anticipated. You know, we essentially had 11 companies from an operating perspective, and we put them into one. At the end of this year, we'll have a single platform across the entire country where we can operate and execute, innovate and create products, a platform that other companies can develop their services on. And we'll
so the integration will be complete.
Yes.
And a very difficult one, as you say, given all of the different operating entities when you brought them together. You mentioned M&A, of course, and many people are familiar with the fact that the stock did go up, to be fair, on the speculation perhaps of consolidation, whether it was Verizon or SoftBank. Do you regret, or do you think back on that as a lost opportunity, perhaps that might have been better pursued in some way? Because certainly many people believed it was your resistance to doing a deal that prevented it.
Well, as I said, we have a great set of assets. We have an opportunity to create a lot of value. And we think that what we're doing creates the most value for shareholders, which is my objective. Remember, you know, when we closed this deal 2 years ago, it was closed at about $190 a share.
Stock, yep.
So we're at $310 or so today. I haven't checked. Well, it's not open yet, but you know, in that range. So we're up over 50% in a 2-year period, which is a pretty good result. It's the kind of result we had expectations for, and the way I'm compensated. So we expect the company to perform, and we expect it to perform well. And all of our decisions with regard to who we talk to and what we do for M&A, whether we're the acquirer or whether somebody wants to talk to us about acquisition, is to the benefit of the shareholder. And we think that what we're doing is the most accretive thing you can do for the shareholders of the company.
And will result, I assume, then, in a stock price that exceeds anything that might have been sort of discussed during that period of time.
That's right. All value is ultimately future value. And we have a tremendous asset with lots of potential, and with the potential of making proper investments, doing a proper integration, and getting the scale economics that we're getting, and then using that to create that value. And so when we look at all the opportunities out there for us, we can't see anything greater than our own customer creation machine.
And yet you seem to be fighting something of an uphill battle, and I say this sort of having followed the industry lately, and our parent company, Comcast, is part of this, which is the focus on video sub losses that investors seem to have, as opposed to sort of looking at the whole. And the broadband additions, for example, your last quarter, very strong there.
Yep.
Is that going to change at some point? Do you sense, or do you have a feeling for what it's going to take to get investors to look over here instead of over here?
Well, I think it's happening. You know, most people realize that we're really a connectivity company, and that video is part of that. But we're also a mobile company. We're also a fixed broadband company. We're also a fixed wireless company. We are the connectivity company, and we're the best connectivity company in terms of having a platform that can do more things than any other platform out there.
Why is that? What do you mean
Well,
when
the
you say that?
capacity of our network, our fiber-based coax network, is tremendous. We're at 1 gig everywhere in the United States by the end of this year, capable, meaning every customer passing that we serve could buy a gig of service from us. That was unimaginable a few years ago. It was done with very little capital investment, and we're on a pathway. We actually have a pathway to get to 10 gig symmetrical.
10 gig.
10 gig, which is hard to imagine what you would use it for. So is 1 gig.
Although we always seem to figure it out, don't we?
We do, and I think there's a whole new set of products that are going to come along. Entertainment products, virtual reality products, three-dimensional holographic products that will be the new forms of entertainment, the new forms of education, the new forms of information that people use 5 years from now, 10 years from now, and our networks are capable of carrying those products. So I think we have a great situation from a connectivity perspective.